Well, the IPO market fizzled in the third quarter. The number of public debuts down nearly 50% from 1 year ago. But will a pipeline of large deals help salvage a worse-than-expected year? I want to bring in Kathleen Smith. She is Renaissance Capital IPO ETF manager. Kathy, great to see you as always.
Thank you.
Characterize the market for us right now. I know that the Pure Storage deal fell below issue price. We got a big deal next week, First Data. How would you characterize the market right now for IPOs?
Well, the IPO market, after the first half, when it was very strong, began to fall apart along with the overall market. And basically, there are a lot of jitters. Investors are sort of, the tables are being turned now. The issuer, who had been in the driver's seat in terms of valuation, now the investor is in the driver's seat. So what we're seeing, in fact, not only the slowdown, as you mentioned, but the pricings are being done at heavily discounted levels. For example, last week, the deals that did get done, and many are getting postponed, were done about 25% below the midpoint of the proposed range. Highly disappointing for issuers, but needed for investors to make money in these IPOs.
Wow. And they have. That's the game within the game, is pricing the deal right. I've thought that there's an IPO bubble since the end of last year, but if you look at some of these deals coming, First Data is a very big deal. It's got leverage. It's a legacy company. It's not Alibaba. It's a known entity. Private equity is behind it. Everybody knows that they have more to come after that IPO. How does private equity price this so low that they can keep coming to market and keep pricing the next follow-on properly?
They are going to have to price it low. I think that this is the time for investors to look at IPOs. You're not going to have to chase these. They're not going to be the run-ups and post-IPO trading.
Right.
These are going to be priced rationally. It's a much more rational market. The public markets, the irrational exuberance, even the biotechs have melted down, but that irrational exuberance of the dot-com period, it doesn't exist in the public market. I would say it exists possibly in the private market.
So you got two big LBOs next week, First Data and Albertsons as well. And then you're saying it's really good for IPO investors because you're going to get a better price.
Yes.
But obviously it's bad for issuers, and that indicates it's tough market
part of what
environment.
you just said, I mean, these are clearly not new companies. I mean, last I checked, Albertsons is pretty old. And First Data, to the point, there's a huge pipeline of private equity stuff that they need to sell back to us. Isn't that where we're at this stage?
Well, I would add, not only is it the LBO private equity, a huge backlog, very important to monetize, but look at the venture side of the business. And this week we had an extremely disappointing IPO by Pure Storage, a very fast-growing company.
First tech IPO since July.
Exactly. And a company with tremendous top-line growth, but very large losses. It broke issue right away. And, you know, the venture community has been waiting for deals like this to get done. There is so much capital in the private venture side of the market. What are they going to do? I look at that and say that's where the contraction. We've contracted in the public markets. We react right away. In the private market, the reaction time is a lot slower. And we think that there's going to be a slowdown in capital flows into the venture and private equity market as a result.
This morning I was looking at IPOs. Loan Depot is coming public. This is not the home. This is the Loan Depot. $100 million. Morgan Stanley, best of luck.
What about Ferrari? What's going on with Ferrari is evidence. I mean, that's a great indicator of what's going on in China and Asia, quite frankly. Their biggest market.
Those are good. That's a good example, Dagen. Ferrari is a growth company. And also SoulCycle.
Oh, right. SoulCycle's going too,
So these are companies that have been on the counter, and they can wait a little bit. Because they actually are profitable growth companies.
And they will wait. They will wait.
And although I think Ferrari's been moving and pretty close to announcing, but I think that SoulCycle's waiting. If you are earning money and you see the market like this where the buyers are a pretty cranky bunch on the IPO side.
What's the rush?
Right.
What about biotech IPOs? That's something to talk about because we all know what's happened with biotech stocks.
There's a major meltdown that's happened in biotech. It reminds us of the dot-com bubble of 99-2000. That's our current bubble. But that bubble is very fastly deflating. And we are seeing very poor returns. I think that will probably mark 2015 as the top of the biotech IPO activity. I think right now there's got to be a lot more sanity in there, and the returns are so poor right now. So I think that the biotech issuers will be lucky that they get done.
All right. Agreed. So the big news in the IPO market, First Data next week, we'll see it'll be priced low.
Yes.
Kathleen, thank you. Kathleen Smith there, Renaissance.